if you live in the if you live anywhere in Toronto, you show up. My main goal is that fact we're going to be talking about cryptocurrency all the time and just pretty much getting people into this market, but also getting people into learning, right? And that's where we're like education is key, especially in this. And one of the reasons why I ended up joining affiliating myself with the IM is because I want to learn, right? I've been in the crypto market for a long time, but I didn't understand what was happening until 2020. And that literally is the when I joined IM, and now I have a deeper understanding that I get now conversations with people that are on Wall Street and talking to them about like what's happening, and they're taking my advice. So I don't have the education they have. I didn't go to Yale or anything or U of T or anything. I'm a college dropout, right? And college dropout, ex-convict. I got a lot of stuff on me. And at the end of the day, boom, I'm now putting sauce for people. And they're like, yo, how do you know this? Where'd you learn this from? Thank God for IM. That's all I gotta say. All right, so let's get started. Um, so it's Bitcoin on a weekly chart. It's been doing absolutely nothing. Like if you're wondering why I've been like dead silent, it's because this is what's happening. Yeah, yeah, yeah. It's nothing, right? It's a whole lot of nothing. And until it does something, like everybody's saying the same thing. Until it does something, you're kind of in this place. But this is the best time for actually to do dollar cost averaging, right? So talk a little bit about dollar cost averaging, what's the power of it, and why you should be doing it, and not paying attention to realistically this is the power of investing into it and not so much the trading aspect of it. Okay, so everyone, if you haven't seen this site before, this is called this is trading view, but we're going to go to a site called DCA BTC, and what it does, it actually just calculates the dollar cost averaging for BTC. And for me, I like to get, oh hey, I'm going to check that out too. This is dollar cost averaging into other cryptocurrencies. I have to check that out. I don't think I've ever looked at that one. Crypto Hunter. Hopefully this is not spam. Nope, spam. All right, so this is the site here. All right, so here's the cool thing about it, okay? And I like to give this thought until people can understand like the power of dollar cost averaging. It's not even about if it's going up or down. When we are doing absolutely nothing, like here's your highs, here's your lows, there's a whole lot of nothing happening. So realistically, everyone's saying the same thing. We either break to the top or break to the bottom. Christopher Derrick, price trap. Like this is the trap price this is on a weekly, huge trap. But you can see it's not really doing anything, right? And in this, you can actually look at it in terms of buying and selling if you want. Where like at the top, you can sell it down on margin, buy it back up. I personally speaking, I would just go down to the scalper and utilize a scalper for that because it's just going to be more poignant. But you can see it's not doing anything at this point, but it also didn't do anything here. And this is often reminding. Bitcoin has these lulls where it does nothing, right? Imagine being here and throughout this entire time, this is weekly candles, by the way, right? Imagine you drop down, and this is November 8, 2018, all the way to March of 2019. April 1st, it did nothing. Now here's an interesting one. What if it's getting ready to bump up like this? Just something to think about. This is April 1st. That's 126 days of absolutely nothing. We are currently on 77, almost 84 days of being between 37,000, give or take, and 40,000. Where at any point on the week, you can be looking at Bitcoin and you can be like, yeah, I got a good buy price. And you can be like, oh my gosh, it's heading down, right? And there's a lot of red there, so get ready. So it's the power of it, right? So let's go back to the worst day, well, one of the worst days in Bitcoin's history, December 17th, 2017. And no, going on that day is actually one of the best days. I remember that. It was like Bitcoin hit $20,000. It was unbelievable. Everyone was partying like it was 1999, but it was 2017. You guys know Prince. I'm old. it's 19. All right, there we go. December 17th. Okay, so in 2017, Bitcoin hit $20,000. If you had just put $10 weekly into Bitcoin, you'd be seeing a $4,000, 160%. So Andre just talked about risk to reward. What'd you risk? It was like, what'd you actually risk? Coffee at Starbucks 2 times a day, 2 times a week. Like, that's it. And it's now coffee at Starbucks is long gone, but if you just did that, that's how the power of investing. Let's say you put 10% of your how much you make into Bitcoin. So let's say, for instance, you have a standard job, you make roughly about $2,000 biweekly. You took 10% into that, right? Well, look at that store of value. Your 10%. So here's the interesting thing. Okay, your $200 from 2017 can't even get you what you could have got for this is more proper because it's actually from 2017. It's 44,000. I had the wrong calculation. So your $200 from 2017 is actually worth more now. But if you think about it, like $200 now in Canadian dollars is actually worth less now than 2017. The easiest way to look at that is just go to the actual like index. So like for me, I don't cap. I just look at things and it's like 2017, what was happening? Here's my Canadian dollar. All right, you know what? Ooh, you know what? It's pretty much worth the same. Let's see. In 2017, the Canadian dollar in May. Oh, you know what? No, it's worth less. Yep, it's worth less. Here it is. It's actually worth the same. It's worth like 1% more. All right. Well, all this means is that it's worth 1% more, but inflation has been 9% over the course of almost every year. So actually, you have lost value in it. You haven't kept up with inflation, just keeping your money in cash. So, anyways, you put your money in, you have $44,000, but you actually have you have 4 Bitcoins that you've been buying for the last 6 years. 400% ROI. Bitcoin has been the best store of value for everyone to have over the last decade. And there's no joke about it. And this is where I was laughing because like when Andre was talking about crypto and people were saying it's a scam, it's like, I don't think you fully understand what's actually happening here, right? And when people like the guy posted a YouTube video, he's like, oh, see this YouTube video said crypto's a Ponzi scheme. And then he started talking about Squid Game coin. It's like, well, he's talking about the worst crappy coins ever. It's like, you don't invest into any of that stuff. That's all vaporware. We're not talking about the same thing. I'm talking about gold. You're talking about like poop. And like, it's not the same, right? So at the end of the day, what we're talking about, I'm talking about technology. I'm talking about the difference of technologies and the changing of technology, right? Go tell the American government that Bitcoin's a scam. Go tell Elon Musk that same thing. Like, they're investing in it for a reason. MicroStrategy is investing in it for a reason. Russia, Ukraine, they just legalized it so it can be transferred in. What type of Ponzi scheme is this? If it's a transference of money, right? So oftentimes the reason why people say that is because they can't fully understand what the heck's happening. So don't mind the people that don't understand. Start understanding how it can work for you. So realistically, this is like the last 6 years. This is the power of it. Now understand this, okay? The money is irrelevant. It's actually this, because I can change the money. The ROI is not going to change. So if you had a lot more money to invest in the last 6 years, let's say you have a lot more money. Let's say that you're a guy like our friend, Mr. Jay Brown. It doesn't matter how much the ROI, the percent doesn't change. That's what's up. So it doesn't matter how much money you're investing on a weekly basis. Even if you are investing, the more, and you can see the more and more that I invest, it's like, wow, that's a lot of money, but realistically, how much money it grew by, right? And this is how you have to understand how this works in terms of dollar cost averaging. And in these moments and in these times when the market's doing like nothing, this is the time for you to be like just buying on a weekly basis. So like, this is what I do. Personally speaking, every week without fail, I just buy into Bitcoin. I don't think about it now. I just buy in. It's like 10%, boom, buy. I don't think about it. The reason why I don't think about it is because this is not an action that I have to think about. This is not a matter of like, oh, well, maybe I might buy it. Maybe I might not buy it this week. No, I'll buy it every week because it's protecting my dollar, right? And this is what I'm realizing now. over the last couple of weeks, there's been a lot of political stuff that happened, and one of the things that have majorly happened with terms of Bitcoin, not in terms of Bitcoin, but politically, is with what's happening currently in Europe. A lot of people can't even take their money out of the country right now, right? So imagine that you're now something happens in Canada and you can't take your money out of you can't take your money out of the bank. The central bank has now stopped it off. Well, this ledger wallet can be in my pocket and I can take it anywhere in the world and I have money. This is where we're going with this, right? I no longer need to be attached to the centralized agencies. I now can be disattached, right? So what does that do for prices? Prices just mean prices are irrelevant. It goes up, it goes down. Especially when it goes like this, you can see it's very irrelevant. It's staying within the zone. So when we're looking at this, it's like, well, what's actually happening, right? Like I said, dollar cost averaging is what you want to do. What if it goes down? Cool. At least you didn't put $10,000 in it. If $10,000 is what you have, at least you didn't go YOLO in and it went down. What if it goes up? Well, you should have YOLO. No. The smartest play is always dollar cost averaging, whether it goes up or down, right? And dividing up your dividing up your cost into the market versus going all in the market, right? And that this is like the key when we're looking at this type of market when it starts going like this. All right, so let's go down to the daily. And now I have two different projects I'm looking at. One is Pound and the other is Chess. I'll take a look at them with you guys as well. So you can see this right here, even more of nothing happening. We have closed over to 50 EMA. I was looking for this to become support. So we just started this candle here. If this daily closes above here, this will confirm support for me. Now, I do see this last down candle here. And for me, the interaction of that last down candle will be very nice, very nice. And I wouldn't mind it at all. We have a candle. If we just go by, we can go by wicks or we can go by smooth. So this is a high, this is a low, this is a higher low. If you look at this is a higher high-ish. It's kind of like this is just all confusing. There's no break of structure. And I go to lower time frames, you'll probably see that, but like realistically, I would have liked to see if you were going to go down further, the interaction of this. And I mean, it kind of interacted in that gap right there. This is all smart money, right? Interacting gap. There's a gap. But that's not enough. Came back up, didn't really come into it. So at this point now, I'm actually looking for it to start going, find a position either here. Like this position for me would be what I'd be looking for. I'd be looking for a long from this position. And the reason why is because I've been bullish on Bitcoin ever since here. And realistically, I've been bullish on Bitcoin ever since here. And like what I mean by bullish on Bitcoin is that I was never expecting it to drop below this point here because this is the 1618. And it means nothing to that. It's the 1618. It could drop below anytime. But there were all other fundamental things that meant it. Now, when we came down here and we started making these waves, I was no longer looking for it to drop down lower than here. Now, can it drop down lower than here? It can do whatever it wants. And so this is the purpose of like dollar cost averaging. You're not trying to catch it from up here. If it did come down here, you still have to buy it. But if it does come down there, that means it's fundamentally different. There's something happening that you don't know about, right? And after it gets revealed, you're like, oh, that's why it dropped, right? Like if it does drop below here, trust me, there's a reason for it, and you won't understand it until after it drops. And at that point, you're like, oh, these guys are good. Like, and by these guys, I mean the scam artists that we elect. Okay, so when we're looking at this right here, we can look at this from like a Fibonacci point of view. We can utilize our 50% 618, and then here's a 618. For me, that's called, I like that. That's called confluence. When I start seeing more than one thing, I have my smart money. I'm already trading off of here because it's my last down candle. But I also have the fact that this is a 618. So for me, this is a great zone for a margin. And like we're already really early in this, right? So like if you're looking at this and you're like, oh, I'm gonna take this trade right here. Well, I can almost guarantee you it will come into here, it will stall for a bit, it might come down lower, maybe come into this gap right into here, and then come back up. and then close up top here. So what I would be looking for, ideally, like in a perfect world, I wouldn't want it to come back here. I would like it to stay, like hold this 4 hour, this EMA. I would love for it to just bounce off of 382. That'd be better. But this is my ideal situation where we come just a bit lower, come back up, bounce, and then start making continuation. Now, the reason why I'm looking for the continuation over the continuation down is because the interest rates were last week, right? They introduced interest rates, they raised interest rates by 0.5%. And I've talked to you guys about this before, that one day raise interest rates. See, they finally raised interest rates. It went right to my line that I was expecting it to. This is what's so cool. Like this type of skill set that we have, we can unlock the code for everything and nothing is surprising anymore, right? When they were talking about raising interest rates the entire year last year, I looked at this and I was like, oh, okay, there's a chart. That means I can analyze it. And I looked at it and I said, well, the last time they raised interest rates, they only went by 50 basis points. Most likely they're going to do the same thing. And we can see the timeline, December, all the way to, this is almost till December 16th. They kept the interest rate the same rate for almost a year, right? Like that's nuts. Like, I don't think y'all have seen this. All right, so this is December 16, 2015. The next time that they announce interest rates, we are now sitting at October 13th, because they meet a lot, but they only do these things at certain times, right? So they're only going to announce the next interest rate. I'm pretty sure it's the summertime. So this is going to just chill out until, I'm pretty sure it's summer. It's going to be like summer of like something. I think it's July the next time they meet, which I've already anticipated that it will add 100 basis points. That was my speculation, which would bring us right into this 50% 618, right? And if you look at how they react, this is the step. So this is another 25, another 25, another 25 till we're at 100, and then up here. I think because they announced last year they're only doing 4. Oh, nice. They're doing 4 rate hikes. They're doing 4 rate hikes this year. This is rate hike number 1. There'll be number 2. But this is where I was looking for rates to go up to, which is for 2.26 right here. So for me, I was looking at this as a place where if we get past here, it's not a good scene. And what I mean by not a good scene is that now we're going to be talking about interest rates that we haven't seen since 2007, 2008, which is like 4.5% and whatnot. And then realistically, if we pass there, like I marked this thing up. Like I looked at this, I'm like, well, what happens if this thing starts? It's just hitting up all my stuff. I should probably check it because let's see. They probably went into that gap. Oh yeah, so it's coming into there. So this is where I'm really looking at 39. I was looking at, this was my high interest point where if they were going to turn around, they would have turned around. They did that this morning. So now they're coming down to here. So I wouldn't be surprised if it just wicks down and then comes back up. So I would have an alert there. I don't like limits for crypto because oftentimes it can come down lower and then wick you out and then go. I like to be around. All right, so back to interest rates. So if interest rates go, this is like the most boring topic ever. But at the end of the day, like once you understand this stuff, like Bloomberg starts making sense. And then this is how you can have discussions with people, and people will be like, yo, how do you know this stuff? And not realizing like this stuff makes money, right? And this is the key. The only reason I know this stuff is because it makes money. And this is why I'm like, I don't really care in terms of it's the most boring stuff ever. I look at it as how can I make money off this? Because this is how I make money. I make money off of trading in the markets and I make money off of other things. This is one of the things that I do. I trade in the markets. I like to make predictions off the market and where it's going. So when I'm sitting there, I have a bias. So already we're going to break this trend line. This trend line is useless. It's too long. Okay. So you can see right here, if we start breaking these lower levels, we've never actually made a new high. right? If you actually look, we can see this here. So let's get rid of the fib. Okay. So now if we look at it from this point of view on a weekly, we can see, let me get rid of the light blue line as well. There we go. Okay, so we never actually made new highs. We've always made high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Like you can't go lower than 0.25. Now the real question is, are we going to reverse this trend, or are we going to continue making interest rates lower, right? So every single time that we raise interest rates, it's always lower. So the real question now is that, is this now going to reverse back up? Or are we just going to hit 2.2, 2.5, kind of have like a double top and then hit 0.25 again? Because this is the only time. And this should be reminiscent for everyone. The reason why interest rates were raised is because this is when they took the dollar off the gold standard. And so this should all start making sense. When they took the dollar off the gold standard, then they know they can start printing as much money as possible. So when they did that, they raised interest rates because inflation started rising because they printed more money. Isn't that weird that the answer to inflation is raising interest? But the real reason why, one of the biggest reasons why inflation happens is because the printing of money, supply and demand, right? If you increase the supply of money, yes, it will help for a minute, but then once we ease everything off, this is what they call quantitative easing. If you ease everything off, right? They try to bring back the money by raising interest rates. So no matter what, you as a consumer get hits, because now once they raise interest rates, everything's balanced again. What happens to the price of gas? Does the gas station now tell you, oh, because we've balanced everything, we're going to bring down gas back down to 80 cents? No, they're going to keep it at $1.20, because that's the new standard that's in our head, that it's all of a sudden good. If you see $1.20 gas, you tell me you're not going to get excited, because they've already trained you to start thinking like that. Because right now you just showed you $1.90, you're like, my heart, I had to, now do I take the bus? Do I take the, like, people are actually literally thinking like this. My thing is, like, right now the goal is not to, like, the goal shouldn't be conserving. The goal should be figuring out ways to make more money. It always should be that. And I know it's I'm not even trying to be like disrespectful or even like harsh, or even like, what's the word? Even trying to be like, yeah, harsh. I'm not even trying to be harsh with anyone. I'm literally saying the goal at this point is to figure out ways to make more money. And we have the best opportunity known right now in order for people to make more money. Like, no cap, right? Because we're teaching people how to actually read this stuff. B, here you go, here's a business, and all you got to do is show people what you're learning. Man, come on, it can't be this simple. It can't be. Okay, so as you can see, this is what my expectation was in terms of interest rates. And so how does this affect Bitcoin? Okay, so let's go back to Bitcoin, because this is what we're actually talking about. That's a messy chart. All right, that's another messy chart. I leave my charts messy for a bit. There it is. That's a cleaner chart. Okay. So the reason why this can affect Bitcoin, I should have did the VLX. Okay, there we go. The reason why this can affect Bitcoin is because the fact that when they raise interest rates, right, the correlation of raised interest rates and Bitcoin's bottom was like exact. They raised interest rates and interest rates hit the bottom all throughout this bear market. Okay, so like interest rates started raising in 2016. Okay, so understand where I'm going with this. Okay, so let's go back. Let's do can I do a parallel? I can do a parallel. I can do a parallel. All right. There it is. And in this, I want interest rates. Okay. And I will make this a weekly as well. Okay. Boom. Okay, so this is 2016. So what do we see? 2015, they raised interest rates. Look at the top of when they got to the top of the interest rates. Look at what day that is. December 17, 2018. what did Bitcoin do from the time they started raising interest rates, 2015, till the end, the top? So this is 2015, we're right back in here. Halving event happens. All right, this is how I end up gathering my information. Okay, so now we're in 2015. Bitcoin's in a bull market till it hits a top. We haven't hit the top of interest rates. Now we're hitting that one. Look what we do. We hit a top, and now we're heading down. Huh? What was the top of that interest rate? 2017, December 28th. What was the bottom of that Bitcoin drought right here? November 12th, December 17th, 2018. Understand there's correlations to this. It's like, why would that happen? Why would this happen where it looked like it fall off a cliff? Like, look at this. We're holding. Hold the door for all my Game of Thrones lovers. Hold the door. Look at that. It's holding. And then boom, just takes everybody out. Well, we also, at that same time, we also do raise the interest rates one more time. And all of a sudden we're hitting that 2.5 interest rates. Now it costs someone 2.5% more to borrow money than in 2015. So at this point, everyone wants to focus on paying down their debt as soon as possible. Pays down their debt. So the rich pay down their debt. The poor live through this, and they don't understand why this is happening. And then all of a sudden, interest rates start going down again. 2019. Well, look at this. Interest rate starts going down. Right? Correlations. Now, here's the funny thing. This is not the only correlation you can actually find it in. You'll find it in the stock market, S&P 500. You'll find it in the Dow Jones. You'll find it with every single market that's an asset market that people borrow money to put in. Okay, so what happens next? We hit our 0.25 all of COVID, and we finally started going up. So here's what everyone's saying, that it's going to go down. But the last time that we raised interest rates was right here. What was happening? Bitcoin was going up. So my projection is still the same, because this is the last time that we raised interest rates and it went down up. But this is why, like, you're hearing people say, this is what's so confusing. You're hearing people say they're raising interest rates, so everything's going to start dropping. That's not how this works, right? If you're a person who's borrowed a lot of money, when do you think you're going to start paying back your money? You can pay it back. You can pay it back here, but this is 0% interest for you to borrow money. What do you care? Right? This is still 0% interest. 0.5 is not like, oh my gosh, I can't believe it. Right? 0.75, it's not worried. 0.98. Okay, now you're making me pay 1%. Risk to reward. We talked about that. I'm now gonna start paying back my loans now. Why? Because now they're charging me 1%. Before, they're charging me less than 1%. At this point, I will start paying back my loans. Right? Well, look what happens when they get to 1.5%. Bitcoin also starts tanking. Right? Correlations are everything. And you start noticing what happens next. So my projection of hitting 1.5, right, is also synonymous with us getting to some sort of top. I've always, so for me, I haven't changed my ideas in terms of what's happening, because of the fact that, and I look at it on a logarithmic, this is what I've been staring at. And just like Andre, I'm very confident in terms of what I'm looking at. And it's just mainly because of the fact that, like, you have to be confident in something. It's either going to go up or down. What is it to me if it goes down? Oh, well, I lose some money. I'll buy back again at the bottom. What is it to me if it goes up? One, I'm pretty much one of the only people that are saying this, because everyone, when I say this, people are like, no, you're crazy. Two, it's a lot of money, so I don't even care about the notoriety. I actually just care about the fact that this is a lot of money, right? This is a 1,000% gain on Bitcoin. So you can understand why I've been like I'm just super bullish on this, because it hasn't dropped below here. So for me, would need to drop below here and then come back up. And even if it dropped below here, so let's say, for instance, it dropped below here and came into this gap here, this is still not a high to low. Like, the high to low, if you want to know from the beginning of this, is right here. I know it's crazy to think like that, but like, realistically, this was the last low of this entire market. And before that was this. This was an 88% retracement. of this high, this low to this high, and 88% down. So, and then even if we came down and start like this is like understanding Bitcoin like on a logarithmic scale, you start really seeing and understanding like, oh, like we just been going up forever. Yeah, it's never actually gone down, right? It's gone down from all-time highs, but now look at it from this perspective. You can see why a guy like Picasso is very bullish. You heard if you haven't heard Michael Saylor talk about it with Patrick Beck David, I suggest you listen to that podcast. 2 hours of apps. Like if you don't understand Bitcoin, blockchain, cryptocurrency, what's happening, I highly suggest you listen to that. Because at the end of it, you're probably just gonna buy some Bitcoin. And he's like, I'm not even trying to sell people Bitcoin. That's not what I'm like. It doesn't matter to me whether you buy it or not, because the banks already own some of it. And a lot of rich people already own it. So realistically, it means nothing for you to get it. But what it is that this is something that things are changing right in front of us, and if you can't hear it and you can't get involved in it, you're gonna be like, damn. So now when you sit back and look at it like this, are we actually ever going down? And this is where, for me, this is how I now sit back and I look at this. Like, this is art. And so now for me, what I look at is like, okay, well, let's look at halving events instead of highs. Because the fact that if we were going to hit a high around December, right? Because this is like around the timings we hit highs. What if it's not about the timing that you hit high? It's actually about all about the halving. So it's actually about the lows. And this, I've heard this before, that don't pay attention to Bitcoin's highs, pay attention to Bitcoin's lows, because the highs are irrelevant. Is it going to make, once it makes that high, is it going to make a higher low? So for me, Ivan Paychecks on Instagram was like, drop what you expect Bitcoin to be at by the end of the year. And my prediction for Bitcoin at the end of the year has always been the same. Going into like this year now, it's like, after this didn't happen, we didn't make our way up. I was like, well, I anticipate us to make some sort of new all-time high and then find our way back to $60,000, $70,000 as a new baseline low. And it's like, the thing is that $60,000, $70,000 is going to be the new 3,000, because this is the halving, this is the low. Is this going to happen? I don't know. I'm confident in it. Am I willing to bet my house on it? I mean, yeah. Am I willing to put money on it? I mean, I do. So for me, this is what I'm trading. And until it shows me another thing, then I'll change my mind, right? If it drops down lower, right, then I'm not going to be looking for this high anymore, because at this point, this fundamentally has changed, right? And I'm not even looking at the price channel, because even the price channel, if you look at this is why I actually said that during COVID, the COVID drop was manipulated, because if this is the channel that we were staying in, okay, we were coming in here and staying in this channel, the COVID drop shouldn't have happened so low. And do you see how fast it actually regains the channel? So, and minus a black swan event, like where we're at right now, minus any sort of black swan events, we shouldn't really be coming underneath here, unless, like for me, that's why I'm looking for the high, the low, kind of drop lower and then come back up, kind of drop lower and come back up, drop lower and come back up. But I'm looking for that blow off top still. So for me, until the blow off top happens, it's kind of hasn't changed. Nothing's changed for me. It just means that we've run a larger accumulation cycle. This is also potentially what everyone was talking about in 2019, 2020. This is a potential super cycle. Now, if we were to be in a super cycle, right? What's a super cycle? It's where we just have these two bullish markets, two stories of bullish markets, one bullish market, two bullish markets. That's a super cycle. But so here's the weird thing. When I say this still, people are like, no, it's not going to happen, because it should have happened within this time frame. Like, who's controlling the market? Who owns the market? I don't own the market. If, like, for me, like I said, unless it comes down lower, why can't the super cycle happen? Why can't we end up hitting here? So for me, this is kind of like my top, like 400,000. And I've been looking for this, and I've been utilizing. All right, so the highs are here. Crazy thing is like the lows. So when you actually put a trend on the lows, there is a trend that formulates the lows. Isn't that crazy? And I didn't choose, I actually chose this low. That's why I brought it up, because originally when I was looking at that low, I was like, oh, but this is the actual low. Right? This is the low of the market, and this is the low of the market. This is a higher low. This is a higher low, even though it breaks trend, right? And then this is where it breaks out from, and this actually starts from here, which is the top of this, which is like it broke, came under, came back, and then came back, and then ran. So like this is what's so cool about Bitcoin and cryptocurrency. All right, cool. Now that we have that, let me give you guys a couple coins to go look at. It's a dope coin. So now how's all the like the entire market dealing with this? The entire market's actually going pretty well. Pound. I dropped this in the chat maybe like 3 weeks ago. It was sitting at 2 cents. It's now sitting at 3 cents. Ooh, 1 cent. But if it goes to 4 cents, I mean that's 100%. So whatever. Now the reason I like this is because the high performance network infrastructure, modern decentralized network. It's actually a layer 1 solution coin. I'm not looking for a lot out of it. I have a TP at I think 10 cents that I'm looking for, and that's it. Personally, it can go up higher. I don't care. And then chess. This is another interesting one. This one is utilizing. Oh, nice. I bought this. Was also, I didn't drop this in the chat. This is at 79 cents. I started looking at it. It's at 81 cents now. This is the thing about crypto. It's like it can start moving. My sell area that I'm looking at is 100%. For me, you guys remember how I do this, right? I'm not looking for coins that are going to be like, we're not falling in love with any of these coins. We're getting in and we're getting out, because at the end of the day, there's actually one more coin that you might want to fall in, but these aren't it. So end of the day, chess, pond. So like at the end of the day, for like this, I already have it here because I've already marked it up. For chess, I was only looking at 100% gains. So like for me, I was looking for it to get back into like here. I don't care what happens next. Maybe it could go straight up. The reason why I like this coin mainly is because what it is a tokenized asset management program and utilizing derivatives trading protocols. What it just means is that for anyone that is a type of trader, it's giving you a risk appetite, and you can trade using risk to reward returns utilizing a matrix. So even making it further in terms of like what that means is that it's yield enhancing asset tracker and this is not simple. So all it does is realistically is that depending on the appetite that you have, what it will do, it will give you some guaranteed returns. So like, let's say for instance that you want to create B queen, right? You have to deposit, BTC deposit is 10,000 BTC in this one thing, and it's paying on an APY of 2.5 to 7.9. This is annualized, so it's just paying it out all the time in the chess tokens. Rook, same thing. So you can see leverage. This is a leverage trade, and this is a low. Like these are low depending on your appetite. So if you have a high risk appetite, they have the high risk stuff. If you have a low risk appetite, they have a low risk stuff. So think about it like a fund manager, but it's all AI and it's all decentralized. So I thought it was dope. I thought it was cool. I thought it was a cool project to look into. But who knows? It might like shoot up through the roof. That's not something I'm paying attention to. Like I said, for me, I only want 100% because I do have goals that I'm looking at. And I think see, cool. So $1.60 is what I was looking at getting out of it. I bought in at 79 cents. But I do have goals I'm looking at getting out of. I can't even remember what it is anymore. But pretty much it only takes 10 trades. So like realistically, like there's no income plays, but it only takes 10 trades to turn 100 into 100,000. It only takes 10 trades to turn 1,000 into a million, right? It sounds really simple, and it is. The issue that you're going to run into is your patience, right? So like I'll buy into this and I'll get in a project, let's say for instance, and this shoots up, I'm out. Let it shoots up here. I don't care. I only wanted 109. I only want 100%. Like there's certain projects that I don't care about. I have no feelings or no attachment to it. Right? Like this pond, I got in at 2 cents. So for me, 100% is right here at 5 cents. That's all I need. Do I need it to go up to 30 cents? No. Can it go up 30 cents? Probably. Will it be a lot? I mean, that's 1,000% it goes to 30 cents. And I'll probably leave some there for it to go to 30 cents, but majority will come out at 100 and then it'll sit in USDT or USDC and wait for the next play, right? For me, my money runs the play and I make sure it runs the play properly. So I'm waiting for it to go and then I'll do it again. Another thing that everyone should be in, if you haven't been in right now, and I'll end with this, ApeCoin. Okay, so ApeCoin is the Bored Ape coin. So if you guys know who Bored Ape is a the Bored Ape Yacht Club. They released a coin, a cryptocurrency coin. The main purpose of this coin is actually to do the play on their game. So I bought some because I'm like it has the same tokenomic system as Polkadot to me. So I was like, okay, I can agree with that. And if you look at the Bored Ape users, they're very like the Bored Ape, the people who have Bored Apes, they legit don't sell their Bored Apes, right? So realistically, you have a group of uber rich people who hold. So and they're giving out these coins. They gave out these coins to them for free. So there will be some profit taking. I can guarantee you that of these coins. But then there'll be some buybacking once it finds a base, right? Because it's 40% down from when it released. That's okay because 63 like it hit $6.21 and now it's heading up. So for me, that might be the bottom. That's $6.21, but we'll see. But yeah, I would highly suggest you read up about it and read up more about it. But like I aped in, I bought some, I have some because I looked at it, I'm like, well, I looked at the tokenomic structure for this coin and it has 1 billion tokens, right? Polkadot has the same amount of tokens, but this has a larger following. And if they do what they say they're going to do in terms of the game part of it, and then other stuff that they'll do in terms of governance, this will be the governance token for the game. And so like understanding all that means is that if you end up playing the Bored Ape game, you're going to need this token to play. And if you look at like something like Axie Infinity, that shot up to almost $200. So definitely you're just getting started in this. Like this isn't something you need to ape into. Get it, ape. But it is something that you want to do your research on. And this potentially is something that you want to look at holding for a longer period of time because the fact that they're going to be doing a lot of stuff, right? Like I said, Bored Ape holders hold their coins for a very long time, hold their actual like their Bored Apes, right? So there's Bored Ape, Mutant Apes, Bored Ape and Kennel Club, and then Mutant Ape plus Kennel Club. So they gave out these tokens to these people who own these things, and no one else. You can read up more about it in terms of it because of the airdrop, and the airdrop has to be claimed by a certain time frame. And then at that point, I would look for this to kind of move with the rest of the market. So I don't know what the high is going to be. Sky's the limit though, because at the end of the day, it's number 84 right now. It's a top 100 coin. I can see it's becoming a top 30 coin. Which, if you're looking at the top 30, let's take a look at the market cap. It says $1 billion in market cap. I'll show you. Like, so you can understand what it means to be a top 30 coin. It's not about the price. It's actually about the market cap. So let's just say it's number 30. That's $4 billion. That means you'll add $3 billion to the current tokenomic structure. That would put the price of Bored Ape, let's just say at 1 billion plus 3 billion. Okay. So that means that would put the price of Bored Ape at almost $40. You're at $10 right now. That's what that would mean if it hit top 30. If it rose from top 30 to top 20, So let's say it's number 20. That would now put Bored Ape at $80 at the current tokenomic structure. If it hit top 10 with 22, it put Bored Ape at almost, so that's 80. So this is almost $200. So anyways, because and then I'll just show you, this is Polkadot, $20 trillion. We can see how much the difference is a tokenomic structure, right? So there's 1 billion tokens for Polkadot. So this is why Polkadot's price is like this. Where what I was saying with Bored Ape is that there is only 100 million out, 100 million 78 out, and they're going to be, I don't know how they're going to be released. I think they're released over time, and I think there might be a staking mechanism as well. I'm still doing my research on it, but you can see what I mean by, I'll show you the tokenomics. So the current circulating amount is only 131 million. So whenever I see projects like that, that means I can take advantage of them early, because if everyone just starts getting into it and it climbs to, like, say, top 10, I can sell because it's top 10. It's 20. I'll have over $20 billion sitting in it based off the current market cap structure, which would put this at almost the current, like, you guessed it. Like, is it $200? I think it is $200. I'm pretty sure it's 200 because 1 billion, 20 billion. Yeah, I'm pretty sure it's 200. That's pretty cool. So it's currently at $10. So don't say I didn't tell you about it. But this is definitely a coin that I think that everyone should do the research on, kind of find out more about it. And then really, realistically, if you want to get it, it is on these exchanges, Coinbase Exchange. If you still have access to Binance, it's on Binance. Shout out to everyone who has a VPN. To get KuCoin. Oh, it's on KuCoin. Nice, I can buy it. It's on Binance US. Like, it got listed on a lot of exchanges. There's no reason why anyone can't get this coin unless you just don't want it. And I mean, that's cool too. You don't have to buy anything. But this is, I'm just putting this on your radar, and hopefully it does do what I'm thinking it's going to do. And at that point, everyone here is going to be very, very happy. But once again, risk to reward is always a big thing. Risk to reward is you're not trying to put everything you own in it. You take what you can afford to lose and put it in there. And once it gets to certain levels, always take profit. Never try and hold on to it for a longer period of times, especially if you put a lot of money in and all of a sudden you're like, and by a lot of money, I mean, let's say you put $1,000 into it at its current price. If it shoots up to a top 20, top 10 market cap, it will go up. Your $1,000 will go up 20x. That'll mean it'll almost be $20,000. So if you don't take profit, that's on you. All right, guys, that is all. July 4th, 2022. Oh yeah, that is a interesting date that I have. That's my, and the reason why I think it's July 4th, I didn't actually say that. Okay, yeah, you probably saw it there. Yeah. The reason I think it's July 4th, I think July is going to be very interesting in just pay attention here. July 4th, 2022. I just put July as like that's like my expected day, but it's actually going to be like July 16th is going to be the I think that's the next Fed meeting. It's like July 16th. And I think it's July, but I need to figure out because I haven't seen it. I haven't got the confirmation yet. Once I see the next Fed meeting, the next two Fed meetings, because there's gonna be one in the summer, because this is just the one that just happened, which is technically spring. There'll be one in the summer, which will either be July or August. Then there'll be one in the fall, and then there'll be one in December. So whenever we hit that top, it'll be around when they raise the interest rates even more. So we'll see. But that's a speculation. All right, guys, that's all for tonight. Hopefully you guys learned something. Hopefully you guys wrote down some information. Make sure you guys are plugging into the chats. Make sure you guys are plugging into the Go Live Educators. The Go Live Educator that I personally watch is Picasso. And then if you're brand new to cryptocurrency, I highly suggest you watch like Cobain and like Corinne and like get into this, man, because right now this is what's up. Like you're never gonna have a time like this. And oh, speaking of which, there is, if this ends up chilling in this, I'm gonna drop this in the chat, but I might as well explain to you guys what it is. This right here. This is what I'm looking for. I'll drop this in the chat tonight. But if this ends up turning around, then I'll probably end up taking air. But this is what I'm looking for tomorrow morning for Bitcoin to continue and then finally make its move up. If it starts going down lower, then what it's going to do is going to take out all of this. And then you're going to have to look in this wick for the actual, like what's going to bounce off of. There'll probably be something like an 886. So it'll probably go down to like 36. But I don't see that happening based off of the current structure that we're trying to, that's making. All right, that is all. All right, guys, have a good one. Peace.